JodieJo. I'm the team lead of the Sycamore team with eXp Realty.
And I'm Kara Noxner, and I'm the PNW Regional Manager for UMortgage.
It's good to be back with you in regards to some sellers that really want to get their toes out in the market, buy something new, but they don't necessarily have all the cash on hand for that down payment. And so what has been floating around are a few different options. I wanted to talk to Karen in regards to what is a bridge loan? What's a bridge loan?
Yeah, let's go there. So oftentimes when people are hoping to purchase something new, their down payment is tied up in their something old, right? So how do we access that money so that we can take that equity, use it as the down payment on the next purchase? Like, what's the best way to do that? Well, oftentimes people have to write a contingent offer.
Right.
So that means their new offer is contingent on the successful sale of their current home, which sometimes works.
Sometimes doesn't. Sometimes sellers, right now we're seeing more contingent offers that sellers will accept, but in a lot of cases, especially when the market starts to really heat up as our interest rates are coming down, sellers won't be so susceptible to accepting a contingent offer.
Or if they get a non-contingent offer versus a contingent offer, that might just be the determining factor, and our jobs are to put you in the best possible position to win and be the most competitive you can be. And if that contingency is going to detract from your offer, making somebody else's stand out more, then we want to be aggressive in finding solutions that will help you to overcome that. So a bridge loan is an awesome way to do that. And essentially what it is it allows you to do a loan for your current home and use essentially the equity to place a down payment on your future home without having to qualify for the loan or anything associated with your current house, which is awesome.
Yeah. However,
I don't always start there, because bridge loans, because they are very short-term financing, the lenders that are allowing these bridge loans to exist and are closing these are going to make all of their money up front. So because they're not going to be held for very long. These are like 30, 60, 90 day, very, very relatively short periods of time. Normally, lenders make money on a loan over a long term. So if they know, and if that loan is designed to be really short term, they're going to make sure that they make all of their money up front, which means they're very expensive from a fee perspective for clients like you. So certainly if that's the only option, it can be a great one, because you don't have to qualify for 2 payments on 2 houses, even though you haven't sold this one yet. So it can really solve some problems with regards to being able to purchase a home non-contingent, but they're very fee heavy. So if there are other options that I can help you find that will allow you to free up some equity, or maybe do a smaller down payment on your new home that you do have some access to funds, just not a ton of funds, then we're going to look at all those options first, so that we can try to provide you with the most cost-effective solution to accomplish the goal.
Yeah, and keep in mind, if the bridge loan is the way that you want to go, that is beneficial to your situation, keep in mind that is under the guise that you are going to be intentional about selling your home within that period of 30, 60, 90 days. Otherwise, it's coming due.
Yeah, and every lender's a little bit different, so they, certainly have terms, but their goal is to help bridge the gap between this short time frame and this short time frame, and they want their money back so that they can recycle it and use it over and over again as much as possible. So they want to get in and out, you want to get in and out. It just is expensive to do so, but it might accomplish a goal. So if that allows you to get competitive and be the winning offer, it might be well worth paying the financing fees to get a bridge loan.
Right, absolutely. And then we get your home that you are moving away from on market. Well, I really wanted to touch on the different possibilities in tapping into that equity on your primary or even an investment property residence, right? Because it's not just the bridge loan that's available and accessible to you. There are home equity lines of credit, which is the HELOC. There is a refinance option. So can you tell me what are the differences in regards to, say, the HELOC versus that bridge loan?
So it kind of depends on what your goals are, but an equity line of credit is a great option because they're not expensive. They're relatively quickly to put together and close. It allows you to access some of your equity. You can't access all of your equity, so we wouldn't be able to essentially pull it all out. But it is a really cost-effective way to solve that problem of just getting the equity so that you've got a down payment.
Mm-hmm.
However, conversely to the bridge loan, an equity line of credit you still have to qualify for as part of all of your liabilities. So you would have to qualify for the new house and the principal, interest, taxes, and insurance on the new house that we were proposing, your current house, including the principal, interest, taxes, and insurance on the first mortgage, and the new payment on the equity line of credit that you took out.
Mm-hmm.
So depending on your income and your other liabilities, that's going to be a larger amount that you would need to qualify for.
Mm-hmm.
But if you have the flexibility and the income to do it, it's a great option because it allows you to extract that equity very affordably and utilize it towards the purchase and still go non-contingent, which will make Jodie very happy.
Of course. Yes. Well, you said a couple of things in there that I kind of wanted to just tease out a little bit. One was an additional payment on that equity line of credit. So it does kind of essentially become like a mortgage,
Mm-hmm.
right? It doesn't touch the first mortgage. So you could have, one of those lovely 2.5%, 3% interest rate mortgages on that primary residence of yours. So this is separate from that. It doesn't
impact that at all.
Impact that, at all. So this will have its own mortgage rate, correct?
Yeah, absolutely.
Okay.
So it leaves that first mortgage alone if you have one, and you don't even have to have a first mortgage to get a line of credit. It just simply is a vehicle that allows you to extract a certain percentage of your home's equity so that you can use it for other things.
Mm-hmm.
And maybe it's to buy an investment property. Maybe it's to buy a new primary residence. Maybe you are going to buy your new primary residence and keep that. So now you'll have your 2 homes. Maybe you'll keep that and decide to rent it out. So it just gives you the flexibility, assuming you can qualify for all of those payments versus a bridge loan that you don't have to worry about qualifying for that,
right?
For that piece of it.
Right. So, and both of those things, the bridge loan and the HELOC, the equity line of credit, is going to be different than doing a full-on refinance and pulling equity out in that way, correct?
Sure. And that's another way to access equity. And the way that we like to look at that is based on what we're paying off. So if I'm going to do a cash out refinance for somebody and pay off a really low interest rate, we've got to make absolutely sure that that's in your best financial interest. So we would need to see the other things that we're paying off. Are we paying off a ton of really high interest credit card debt? Are we utilizing that on a short-term basis? Is this house going to become a rental property? So before we do a cash out refinance and pay off your lower interest rate first mortgage, it needs to make financial sense to do so. So that's why it's really important to run those numbers, really know what you're getting yourself into so that we can make sure we're making good financial decisions that meet your goals.
Yeah. Lots of really fantastic options and avenues for our sellers out there that want to get into their next home, but maybe not have all of the cash on hand to do so. So they can just tap into that equity in some manner or form.
Yep, I love it.
Fantastic. Thank you so much.
Absolutely. Thank you so much.
All right. Till next time. Thanks, guys.
Thanks, guys.